Dr. Babasaheb Ambedkar Open University.
Hello my dear friends and students, I am welcoming you to all to Dr. Babasaheb Ambedkar Open University in the Chaitanya studio for the video lecture series for the course BBA regular in the subject called Financial Management 202. In that block number 4, unit number 4, dividend and dividend policy in a part 2. As we learn the different types of dividend, forms of dividend, the definition of dividends and the introduction point in a previous session. Now let's discuss the few important provisions with respect to the dividend as per the Companies Act 2013. My dear friends, these are the provisions. So you have to understand it in this particular manner as provision or statute will be defined. First point is that the declaration of dividend to be out of the profit as per section 123, the dividend by the company for any financial year can be paid or declared only out of the following 4 provisions. First is profit of a company of that year arrived at after providing for the depreciation in accordance with the provision of this act. That means if you are allowing the depreciation, then you may pay the dividend. Then the profit of a company for any previous financial year or a year after providing for depreciation as per the provision of act. That means the company, the profit of that company for a previous financial year or provide at any time, any point of time the depreciation, after towards you may pay the dividend or declare the dividend. That means you have to provide the depreciation and provision of depreciation must be allocated or out of both. Fourth is money provided by the central or state government for the payment of dividend in pursuance of the guaranteed by the government. If the central or state government pursuing the guaranteed over it, at that point of time you may declare or pay the dividend. Next, the provision for the depreciation before any dividend can be paid out of profit of any financial year. A company is required to provide the depreciation as per the provision of the Schedule 2 of the Companies Act 2013. That means you have to provide a depreciation and you have to calculate and allocate the depreciation as per the Companies Act 2013 Schedule number 2. Third is transfer of the profit to reserve. A company may, before the declaration of any dividend in any financial year, transfer such percentage of the profit for that financial year as it may consider appropriate to the reserve of the company. That means you have to take a reserve with specified percentage after the after the declaration of dividend, but before it you have to consider the depreciation provision as per Schedule 2 of the Companies Act 2013. The fourth important point and the provision is that declaration of dividend out of reserve. A company can pay the dividend out of its reserve funds created out of the undistributed profit of the company for any previous financial year or the year that is arrived at after providing depreciation as required. That means you have to firstly pay the depreciation, provide the depreciation, or you have to create a reserve fund. On that basis, you allocate or declaring your dividend as well. As per the Company's Payment and Declaration of Dividend Rules 2014, in the event of inadequacy or the absence of profit in any year, if you have no profit, the company may declare the dividend out of the free reserve subject to fulfillment of the following conditions. If you don't have the profit in this particular current year, but you want to pay, you want to declare a dividend, then you must follow this following 5 conditions. First, the rate of dividend declared shall not exceed the rate at which the dividend are declared by it in the 3 years immediately preceding that year, provided that this rule shall not apply to company and which has not declared any dividend in each of this preceding financial year and the dividend provisions. Thus, the total amount to be drawn from such accumulated profit shall not exceed 1/10 of the sum of total paid up share of capital and the free reserve as appearing in the latest audited financial statement. That means that you cannot give the total paid up share capital and free reserve 1/10 of that particular amount. The amount so drawn shall first be utilized to set off the loss incurred in the financial year in which the dividend is declared before any dividend in respect of equity shares is declared. The balance of reserves after such withdrawal shall not fall below the 15% of its paid up share capital can appearing in the latest audited financial statement. That means it's ultimately the 15%. Firstly, 1/10 of total paid up share capital and free reserve. Now the 15% of total paid up share capital appearing over that the audited financial statement. Then no company shall declare the dividend unless they carried over the previous losses and depreciation not provided in a previous year or the year of set off against the profit of the companies for the current year. That means if you are not comprising with the depreciation provision and the losses provision, then you can't declare a dividend in that manner. The fifth important point, that is payment of dividend out of capital profit arising out of the sale or revaluation of capital asset, is termed as a capital profit. The capital profit may be utilized for the purpose of declaration of dividend provided for this have been realized in a cash, remain as a profit after the revaluation of all the assets and liabilities, and there is nothing in article of association of the company prohibiting the distribution among to the shareholder in the shape of cash dividend. But the recent judgment or the recent provision, the dividend paid out of the capital profit is not as much applicable for this particular year. That is Companies Act 2013, which prohibited this dividend paid out of capital profit. Now, let us discuss the procedure for declaration and the payment of final dividend. As we discussed what is the interim dividend, final dividend, and what are the preference share dividend. So now these are the different procedure and declaration of the payment of final dividend. The main sections are defining for the Companies Act 2013, the declaration and payment of dividend, that is section 123 as we studied in a previous way, that is a declaration of dividend. Second, 124, that is unpaid dividend account. You have to operate the unpaid dividend account as we learn in the point number 2. So then section 125, that is investors education and protection fund, that you have to maintain this particular account, that is investors and education and protection fund over it after the declaring the dividend. If there is a deficiency it and not paid to the subsequent particular shareholder, then it will be transferred to that investors education and protection fund. Then section 126 is defined that right of dividend, and section 127 defined that punishment for the failure to distribute the dividend. So ultimately these 5 sections are most important while you studying the declaration and payment of dividend as per Companies Act 2013. That is section 123, 124, 125, 126 and 127. Now let's sum up with this. Go in a different manner. That is section 123 for a declaration of dividend, 124 unpaid dividend account, 125 investor education and protection fund, 126 for the right to dividend, and 127 punishment for the failure of distribution of the dividend. Now, what are the different process for declaring the dividend? So this is the different and the simplest process I ever seen, that the process of declaring the dividend. First, the board of director calls a board meeting. Then the board of director discuss and the amount of dividend in a board meeting. Then company hold the general meeting with the shareholders. The shareholders accept or reject the proposal of that particular dividend, and dividend can only be described after passing an ordinary resolution. Once the declared dividend must be paid to the shareholder within a 30 days. If you are not go through, then you will be charged punishment under section 127 of the Companies Act 2013. Now, dividend can be paid out of first current year, previous year, money provided by the central government or state government in form of guarantee. But in a current and previous year, you must be paid after the depreciation, providing the depreciation. In case the previous year profit, the company can only pay the dividend from its free reserves. That is your general reserve and free reserves are there. Now, declaring the dividend from a previous year profit, then there are mainly two conditions are there. That is, can only utilize from a free reserves and company with the rule 3. Now, question is, what do you mean by sir rule 3? So, rule 3 of companies declaration and payment of dividend rules 2014 is that first, rate of dividend less than equal to any of the last 3 dividend rates that we have studied into the point number 4 of declaration of dividend, that is in a theoretical manner. Here this is a chart manner that you have to apply this 3 rule. The first is rate of dividend, second is amount to be drawn from such reserve, and third is balance in a reserve after drawing such amount. So let us understand the step number 1, 2 and 3, or we can say the rule 3 also. So first is rate of dividend is less than equal to average of last 3 dividend rates. That means whenever you understand and whenever you declare that dividend, that average of last 3 rates are less than equal to the average of last 3 dividend rates. Second is amount to be drawn from such reserve less than equal to 1/10 of total paid up share capital plus free reserves. Third is greater than equal to, that is balance in reserve after drawing such amount greater than equal to 15% of paid up share capital of the company. That is, 3 main rules are there. First is you have to the rate of dividends are the average of 3 rate of dividends. Second is 1/10 of the paid up share capital plus free reserves, and whenever the balance is required at that is greater than equal to 15% of paid up share capital of the company. So this is what declaring dividend from the previous year profits. Next is determinants of the dividend policies. There are the different determinants are there. The determinants of dividend policy cannot be done in isolation. It is dependent decision. There are the several internal and external factors which are to be considered before the finalization of dividend policy, and these factors are as follows. First is economic condition. When the economic condition is growing, the firm may pay the high dividend, but when the state of economy is uncertain, at that point of time, my dear friends, economical as well as political firms mainly maintain the low dividend payout policy, which is treated as which is also for the external factors. Second factor is expansion of projects. Any firms, when having any expansion of the project, require additional fund. The retained earnings are internal source of finance, and if the retained earnings is used as a source of finance, the dividend payout ratio will be reduced, which is treated as an internal factor. Third is degree of control. If the management does not want to spread the control by the issuing the share, in this case, the firm can use retained earning as a source of finance, and consequently, the payment of dividend would decline in nature. Next is cost of capital. The cost of external source like equity, preference, debenture is explicit cost, while the internal source, that is retained earnings, is implicit cost. When the external source, or we can say the external cost, are the costlier, the firm would go for the internal source. So the dividend payment will be reduce. Ultimately, the company will define that the profitability situation after giving the dividend also. Next is earnings status. The flexibility in earnings is one of the constraints in which do not allow the predicting its future earnings. On the other, stable earnings help to predict the future earnings, and a stable firm is therefore more likely to pay the higher dividend. So the earnings status is also one of the factor for the payment of dividend. That is, earning status is also important. Next is liquidity. Without or with poor liquidity, the payment of dividend is not possible and desirable. In order to pay the dividend, the company required to cash, and therefore the availability of cash resources of the important issue of dividend payment. So liquidity is also the one of the important factor which affecting to the declaring the dividend. Next is divisible profit. This divisible profit I earlier talked about in a part 1 of this particular unit. So the determination of divisible profit requirement, only the divisible profit can be distributed as a dividend. Otherwise, it is treated as a payment to the dividend out of capital. Next is legal provision. It is the mandatory for any company to transfer a specific percentage of profit to the general reserve or as specified the reserve account or reserve fund, and this transfer also reduce the quantum of payment of dividend. Next is contractual constraint. If the company has used debenture and or preference capital which lead to fixed payment of interest and dividend, and if the company passes through the recession period, the company will have lower amount of profit and lower dividend will be payable to the equity shareholder. So these are the different factors are there. Another factor is that the additional capital goods. A firm intend to raise the further funds from the capital market for its expansion and diversification projects to attract the funds for the capital market, and it has to maintain liberal dividend payment policy. Now this is the topic of the different dividend policies are there which will be discussed in a dividend policy, but right now the additional capital goods are also important for that. Next is rate of expansion. If one-time expansion project is required to execute, the fundraising needed will be different in a more rapid the rate at which the firm is growing, and the rate will be it's needed for the financing the asset expansions. The greater the future needs for funds and the company want to use internal source, and dividend payment will be reduced in a nature. Now let us discuss the different dividend policies. There are the different types of dividend policies adopted by the companies, and the application of dividend policies is based on the management's philosophy, regularity and liquidity, or we can say the adequacy of the profitability. Another aspects is whether the company is having the developed or developing stage of or many more. The important dividend policies generally followed by the companies are different, and there are the total 7 types of different dividend policies are there. First is no dividend in the initial period dividend policy. Second is regular or fixed dividend policy. Third is regular dividend plus extra dividend policy. Fourth is irregular dividend policy, regular stock dividend policy for a certain period. Next, regular plus stock dividend policies and the liberal dividend policy. Now let us start with the first dividend policy, that is no dividend in initial period dividend policy. This kind of dividend policy is generally adopted by the developing companies. In spite of having the sufficient land profit, the profit is not distributed in the form of dividend but reinvested in a business. Reinvestment is the cheapest source of the finance. So instead of having the external finance companies goes for this source of finance, and this policies is not preferably for the long period of time. It is same minimum rate of dividend is expected by the shareholder. This will be at an initial stage. This will be not for the long term basis. Second is regular or fixed dividend policy. It is believed that the payment of dividend always enhance the credit dividend is desirable. This policy further can be classified into the two categories, that is constant dividend payout policy and constant dividend rate policy. So now discuss that what is constant dividend payout policy and constant dividend rate policy. So first let us understand what is constant dividend payout policy. Under this method, regular or constant rate of dividend is applied on earning per share. The fixed percentage of earning per share is paid to the equity shareholder as a dividend. So if earnings are varies, the amount of dividend also varies from that particular year to year. And this method is quite volatile and fluctuating with the change in the economy and firm's own special circumstances. This method is generally not used by the majority of firm. The difference between earning per share and dividend per share is retained earning. That means that the graph of we can say the dividend per share and the earning per share both are in a growing manner. Next is constant dividend rate policy. Under this policy of dividend payment is made on the constant rate even when the earning vary from year to year. And this may be possible only when the earnings trends of the business entity does not show wide fluctuation. This policy is generally applied when the dividend equalization reserves is maintained by the company, and the firms are generally careful to set the dividend as the sustainable level and raise it only when the company can sustain the higher level. And occasionally the firm may cut the dividend from its reserve situations. Third important policy, that is regular dividend plus extra dividend policy. Well established and reputed companies have tend to pay the regular and or a constant dividend to maintain their image in a market. It is also possible that when the companies earn abnormal profit, directors pay extra dividend in addition to regularly and yearly dividend. This payment of extra dividend is not regular in a nature. Next is irregular dividend policy. This policy is desirable for those companies where there is a income is not regular. Under this policy, either the rate nor the amount of dividend is certain. The purely based on the earning of company, and generally every company make effort to pay the dividend, but when the income or earnings of the company are not certain, in this case the company pay irregular dividend. That means that somehow the one company pay right now dividend, then we will be pay in after the 10 years the dividend, after 3 year, 4 year, 5 year. That means that they are not maintaining or constant or regular dividend policies are there. Next is regular stock dividend policy for a certain period. When a company has a liquidity problem or a company want to expand its own business, in this case the company does not pay the dividend to the shareholders but gives the stock dividend for a certain period of time. Under this policy, size of equity capital keeps on increasing and consequently in a future dividend per share get reduced, and this policy is not favored by the expert field. This is ultimately treated as a regular stock dividend policy for a certain period. Then regular plus stock dividend. Under this policy, it is try to maintain the regular dividend payment to own shareholders. This policy is desirable for the following circumstances, that is, company want to pay the regular dividend and company want to use the retained earnings, and company having the profit does not want to distribute the dividend in a cash form. In brief, under this policy, company want to achieve the two goals, that is payment of dividend and maintaining the cash in the business. And this is the ultimately the safest point. At that point of time, the reputation in a market is a good, and eventually you save that, maintaining that cash for a business also. Next policy, that is liberal dividend policy. This is the purely based on the approach of the management. When the management distribute the maximum amount of earnings in the form of dividend and retain the insignificant amount of earning as a retained earning, is known as a liberal dividend policy. When the company earn a higher profit and the pays the higher dividend, and when earn the lower profit and pay the lower dividend under this policy, which is treated as a liberal policy. It is also one kind of irregular dividend policy. That means if you earn more, then you pay the dividend. If you earn less, then you don't pay the dividend. Or if you want to pay the dividend in a less amount. Is it clear, my dear friends? So now let's sum up with it. In this unit, we have studied the meaning of dividend, dividend policies, respect of thereon, and the dividend return, the form of dividend, the different provision of the Companies Act 2013 with respect to the definition, procedure, declaration of dividend, section 124, 123, 125, 126, 127, distribution with the rule 3, the payment and declaration of dividend rule 3, then the different dividend policies are there. So this is all about what you learn in a dividend, and dividend policies are there. After that, you have to evaluate yourself with the long questions, that is, describe the different dividend policies and adopted by the companies, and discuss about the different form of dividends are there. Now there is a one case studies are there, that is, analyze the dividend policy of any one company through annual report of a last 5 year of that respective company. That means you have to adopt the data of that particular company. You may approach the money control website also, and different companies own websites also, and you define that annual reports. And with this dividend policy, you have to apply your mind with the investment decision also. You have to token up the components of cash flows are there. So ultimately, this particular block 4, that is investment analysis and the financial planning, will be done in efficient manner. So you have to do this case study in your home, at your home. That is, you have to take up annual report and you understand it with the different approach of the financial decision as well as the financial management. Now let's look into the multiple choice question. For the determination of dividend policy, economic policy is internal or external factor? Of course, it's a external factor. Whether the expenses object of the internal or external factor, the determination of dividend policy is always a internal factor. If you want to study more and if you read further, then you may approach these two books, that is Financial Management by Ravi M. Kishore and another is I. M. Pandey. Hope you learn well in this unit. Hope you enjoy this study. Hope you enjoy this video. Hope you earn and learn the well meaning of the dividend and the declaration of dividend policy and the declaration of dividend with the aspect of the Companies Act 2013. Hope you enjoy your study. Have a great day. Have a great future ahead for this particular subject, financial management. Thank you very much.